Good day Forex trader. Your USD Forex signal, strong bearish move continues. The price is trading near one-year lows below $1.1338. Today's your USD signals. Risk 0.75%. Trades must be entered before 5 p.m. London time today. Short trade ideas. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.1338, $1.1371 or $1.1394. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. Long trade ideas. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.1245 or $1.1195. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Your USD analysis. I wrote last Thursday that after making a daily, New York, close below $1.1529, the price was continuing to fall strongly to new one-year lows. I thought that the price now had room to fall all the way to the next round number at $1.1400 without encountering any support, and that the day was very likely to be a down day. This was an excellent call and my bearish bias paid off, although it did take a little longer than I expected for the price to reach $1.1400. Last Thursday was also a down day, as I had forecast. The price made a strong downwards push during yesterday's Asian session and reached close to $1.1250 before making quite a strong bounce. This meant that on some price charts, depending upon the time zone used, yesterday's daily candlestick will appear as a bullish pin bar. While it is possible that we may see a move higher today, do not be fooled by this pin bar. The real test now is whether the nearest resistance level at $1.1338 will hold. There still seems to be bearish momentum provided the price is below $1.1338, which it is now, so I still expect to see lower prices today and over the course of the coming days. The US dollar has made a small recovery, but is holding above key support, and the euro remains weak after the ECB appeared to rule out a rate hike in 2022. It seems the euro is the key driver in this pair, but the long-term bullish trend in the US dollar certainly helps the bearish case here. I maintain a bearish bias and continue to see a short trade opportunity here. The best setup would be a firm bearish rejection of the resistance level at $1.1338. Gbp Usd Forex signal, bearish flag signals possible pullback. There is a likelihood that the pair will retreat in the near term. Bearish view. Set a sell stop at 1.3450 and a take profit at 1.3350, last week's low. Add a stop loss at 1.3550. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3490 and a take profit at 1.3550. Add a stop loss at 1.3400. The GBP USD pair tilted upwards on Wednesday and early Thursday as the market reflected on the overall strong economic data from the UK and the US. The pair rose to 1.3478, which was slightly above last week's low of 1.3350. Strong US and UK data. The British pound rose slightly against the US dollar after the strong inflation data from the UK. The currency's uptrend against other currencies was more pronounced. For example, it rose to a 21-month high against the euro and to a 2-week high against the Swiss franc. The performance happened after the UK published a streak of strong economic data. For example, On Tuesday, the Office of National Statistics, ONS, published strong employment numbers. The data revealed that the country's unemployment rate dropped to 4.4% in September. The number of people filing jobless claims has also dropped. On Wednesday, data by the statistics agency also showed that the country's inflation was rising. The headline Consumer Price Index, CPI, rose from 3.1% in September to 4.2% in October. In the same period, core inflation rose to 3.4%, which was the highest level in more than a decade. The Producer Price Index, PPI, and Retail Price Index also soared. Therefore, analysts expect that the Bank of England, BO, will embrace a more hawkish tone in the coming months. This is because the economy is in a path to recovery. In its November meeting, the Bank of England surprised the market by sounding relatively dovish. It left interest rates and quantitative easing unchanged. Focus now shifts to Friday when the UK will publish the latest retail sales numbers. The Gbp Usd pair's gains were relatively small because of the strength of the American economy. The country published strong retail sales, building permits, and housing starts this week. Gbp Usd Forecast. The Gbp Usd rose after the strong UK inflation numbers. On the 4-hour chart, the pair has moved slightly above the standard pivot point and the 25-period moving average. Notably, the pair has also formed a bearish flag pattern that is shown in pink. In analysis, a bearish flag is usually a sign of a bearish sign. Therefore, there is a likelihood that the pair will retreat in the near term. This view will be confirmed if the pair moves below the lower side of the bearish flag pattern. If it happens, the next key reference point will be at last week's low of 1.3350. Aud Usd Forex signal, Aussie remains under pressure. The pair will likely keep falling as bears target the second support at 0.7195. Bearish view. Sell the Aud USD and a take profit at 0.7195. Add a stop loss at 0.7340. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7315 and a take profit at 0.7400. Add a stop loss at 0.7250. The AUD USD pair slipped to the lowest level since October 7 as investors reflected on the rising US dollar and the relatively dovish Reserve Bank of Australia, RBA. The pair dropped to a low of 0.7261, which was also at the first support of the standard pivot point. US dollar rebound. The AUD-USD pair's price action is mostly because of the seemingly divergence that is happening between the Federal Reserve and the RBA. The RBA published its closely watched minutes on Tuesday. Like in the previous minutes, the RBA seems to suggest that most analysts were wrong about growth and inflation. In the minutes, the bank said that the earliest it will hike interest rates will be in 2024. This happened even as recent data points to a relatively strong economic recovery. For example, home prices in Australia have jumped to the highest level on record. This trend has been helped by the historically low interest rates and the fact that people made significant savings during the pandemic. At the same time, the labor market is starting to tighten after its turbulence during the recent lockdowns in New South Wales. Indeed, data by the Statistics Office showed that the country's wage price index, WPI, rose by 0.6% in the third quarter. This translated to a 2.2% year-on-year increase. The numbers showed that most of this wage growth was seen in white-collar jobs like lawyers and accountants. Still, this wage growth is slightly below the overall inflation. At the same time, the US dollar has surged to the highest level in several months. This growth is mostly because of the likelihood that the Federal Reserve will embrace a relatively hawkish tone in the coming months. This is primarily because of the overall strong data from the country. AUD USD Forecast. The AUD USD pair has been under intense pressure in the past few days. This pressure pushed the pair to a low of 0.7262, which was along the S1 of the standard pivot points. the pair is still below the 25-day and 50-day moving averages. The decline is also being supported by the Ichimoku cloud, which is slightly below the price. It has also moved below the 61.8% Fibonacci retracement level. Therefore, the pair will likely keep falling as bears target the second support at 0.7195. This price also coincides with the 78.6% retracement level.